Nvidia's share price is soaring on the back of rising demand from artificial intelligence. The stock price is at $791 per share, and could it get to $1,000 soon? That's a question I hear a lot of people asking. Also, there's speculation that before Nvidia's stock price will reach $1,000 per share, Nvidia will do a stock split. The last time it did a stock split in 2021, the share price was lower than where it is today. So will Nvidia even let the share price get to $1,000? That's an interesting part of this equation. But assuming Nvidia does not split its shares, could it reach 1,000? Let's take a look at this question and the factors that will influence Nvidia's share price.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned Nvidia's share price in the last year alone has risen from around $200 per share all the way up to $791 per share, almost 4x in 1 year. Now, I know there's stocks that have increased by a greater magnitude than Nvidia, including stocks that have 10x in that time. But what makes Nvidia special is the size of the company and the magnitude of the increase. Smaller companies sure have increased by more, but a company the size of Nvidia growing as much as it has in the last year, it's the fastest growing large cap company in the market, and that's what makes it so special. But let's take a look at why Nvidia's stock price has soared and if it can continue. So look at its revenue in the last 10 years and look at it in the last year. Look at this explosion in revenue, almost straight up to $60.92 billion. But let's take a look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. Okay, so now that you see how big this market is, you can foresee Nvidia growing much larger, growing to 200 billion in revenue, 300 billion in annual revenue, because the market is so large. Even if it takes 200, 300 billion, it still won't be all of the market. It won't even be 50% of the market if that forecast is correct and the market size is going to be over 1 trillion. So there's room for Nvidia to run if it can continue this pace and outspend, or not outspend, but out innovate its competition, because right now it's at least one or two steps ahead, and there are some estimates suggesting that it has roughly an 80% market share of the AI GPU market. Now, competitors are jumping in, but for now, there is an article, in fact, in the Wall Street Journal today that highlighted, I'll share with you, Nvidia has sales of more than 9.2 billion from cloud computing companies like Google, Microsoft, Amazon in the latest quarter alone, and more than a quarter of those three companies, roughly $35 billion in capital spending in the same period. So the vast magnitude of these giant companies' capital investments are going to Nvidia for its GPUs. They're spending their capital investments on Nvidia GPUs because they find it so critical to their core business. In fact, in this same article, there's a story about Elon Musk literally begging Nvidia CEO for more of his GPUs. That's how powerful, that's how highly sought after Nvidia's GPUs are. In fact, in the latest quarterly conference call, Nvidia CEO confirmed that scenario, saying that demand for our chips is still far in excess of supply, far in excess of supply. Meaning if there was more supply for its products, that sales would have been even greater than they were. So you see this surge in revenue would have even been larger, if you can imagine, if Nvidia had the supply to match. Now, Nvidia is saying that supply is increasing every quarter and they're ramping up, and they'll have more supply if they continue to have this kind of demand. Now, competitors are coming out with their own chips. Amazon is coming out with its own chips that it will offer its cloud computing customers. Meta Platforms creating its own chips. Of course, these are not going to be as innovative as Nvidia's chips, but they're also not going to be as expensive. So it could provide some alternative for companies that are looking to save money and still implement GPUs for AI. Additionally, AMD with its latest MI300X chip could be close to Nvidia. I hesitate to say that because Nvidia is so far ahead, but there was some questions if AMD can at least grasp 20% market share. That remains to be seen. So all of these speculation of competitors coming in, that's yet to be seen. And for now, Nvidia's demand is absolutely exploding. And the good news is Nvidia is demonstrating economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. So now that you see how important it is, look at Nvidia from 12% operating profit margin in 2015 all the way up to 54.12% in the latest trailing 12-month period. So as its revenue is growing, its profits are growing even faster. So there's fundamental reasons underlying Nvidia's explosive stock price increase. And still, it's trading at a forward price to earnings of just 27.05. So its increase in stock price has been fueled by increase in revenue and profits and cash flow, and not just hype. It's not just, oh, AI is going to deliver something huge 6 years from now or 8 years from now. Maybe that's the case, but right now, Nvidia is benefiting from soaring demand that's in excess of supply. So the more Nvidia produces, the more sales are going to increase. And in fact, that's what Nvidia has delivered. $22 billion in revenue in its latest quarter. It's forecasting for even more than that in the next quarter, with profits going even higher than they were in the previous quarter. So very realistically, yes, Nvidia's share price could reach $1,000 relatively soon. 12 months from now, 18 months from now, 6 months from now, depending on how the company performs over the next 3 to 6 months, the share price can get there relatively soon. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.